Good day, traders. Welcome to TTR. My name is George, for those who don't know me, and I host the live trading profits show every single Wednesday, and presently running at 6:30 p.m. Singapore time for 45 minutes. I also host the Wednesdays at the Market Show private group for subscribers to the year-long coaching on the 3rd and 4th Wednesdays of the month. I just thought today I would talk about levels of support and resistance, which give me a sense of the higher probability direction of the market. And just to start off, we can start off with Hang Seng 50. Actually, my favorite stock indexes to trade. Absolutely love this market, and primarily because of its three distinct sessions. You know, when it opens off in the morning, 9:15 a.m., closes for an hour, then opens again an hour later, then closes again in the afternoon for 45 minutes and opens once again to the end of the day. So distinct opportunities there. Presently, this thick blue line is the low of 2022, and we got to that by this massive bear candle here, which was on the 24th of October. Now, what's interesting about this is we just have a quick look to the left where we are coming from. Earlier on in the year, we had this massive sell-off, and we spoke at length about this in live trading profits. I think it's probably over 100 recorded sessions now that you can go back and look at. In this period, we kept speaking about the sell-off. And I remember at this time we were saying, well, if the bears are strong enough to break beneath this trading range, that's where they're likely to go. Did not seem possible, but that's where we absolutely got to. Now, what is interesting about that, and talking about measured moves, two types of measured moves that every trader actually has to become familiar with, whether you trade price action or not, like I do. One measured move is simply when you look at the length of a breakout, like we had this breakout here. You expect that the market to get to a measured move at some stage. We had that breakout there, and I was talking about measured moves that the bears want to get down to here. But when all this pullback, kind of felt like it's impossible to get. I mean, this took place in February, March, but we got there, 8-9 months later, the market got to that perfect measured move. Even if you just look here, height of that trading range, and we're talking to say, listen, if we break beneath here at some point when you're up there, the bears want to get down to the measured move, and they got to the measured move. Another measured move is the leg 1 equals leg 2 extension, where you look at the first leg of any trend, could be a bear trend or bull trend, in this case, bear trend, and you look at the pullback. If you do a first leg using your Fib expansion tool, the pullback to the end of the pullback, it will show you where the market is likely to go. Now, if you just have a look at this measured move tool here, if you just move it around for you, you can see exactly where the market wanted to go, and the market got to that with precision with this breakout here. So the measured moves from the leg 1 pullback, leg 2, the market has got to that. The measured move from that breakout, the market has got to that. But we have another trading range created here, another breakout potential. So as far as the bears are concerned, they keep saying, well, if we break out beneath this particular low, so this high, that low, we want to get to a measured move. And the measured move is down there. What this suggests is that there's still a little bit more bad news to come for the Hang Seng stock market. Higher probability event based on the price action. Higher probability event means there's plus or minus 60% chance of the market going that direction. That gives you sufficient room for you to make a decision to follow the market and manage your trades, of course, if the other 40% probability happens. So the market reached this cluster of levels of resistance, and there's still this measured move to get down here. Something else, which I can just put it in for us, that breakout, very strong breakout beneath a tight bear channel. Now the bears seeing that, they say, we're broken beneath the channel, got a pullback, and what we want to do, at least as far as bears are concerned, is just get to the measured move of that breakout candle. So that corresponds almost with the measured move of this. So bears who have been selling all through here and adding their positions, I just want to, wait to see if we get down here. Of course, they manage their stops cleverly to technical levels. So if you get a reversal like one of those, if they've tightened the stops, they don't lose money. But it seems to suggest that there is a goal for the market to go. Now, something else, these measured moves are hidden levels of resistance and support, which you have to put in so you can see where the market is likely to go. But there's other levels of resistance support that as a trader, you need to be wary of or be aware of. These are simply big round numbers. Anytime you look at your price index on this side, whenever you see a big round number, you expect that to be a level of support or resistance. So at some point, this big round number, 16,000, was a big level as far as the Hang Seng 50 was concerned. And we got down before all of this took place, had a pretty, let me move this out of the way. So that measures the height of that bear breakout candle. We had a decent reversal setup for the bears, double bottom at the bottom of a tight channel for the bulls rather. And all the bulls needed to do was to, I'm sure many bulls put their orders up here because it's a perfect setup. Put an order up here and you can do a major move. Stop somewhere down here and your goal is to get to the test of the 20 EMA or the top of the channel line where you can expect, bears to come back in. But the market gapped down and sold off. So the bears were very strong to prevent that setting up. So the bears are strong, small tail, new low. And you can see the pullback by the bulls, very weak, only tested the low of that breakout channel, followed through next day, good. But then we have a perfect enough setup of the descent in 10 EMA, which I use to indicate the strength of a trend and continuation. So double bottom at the bottom, at the low of 2022, the probability favors the bears at least to make a little bit more move down there. So key levels of resistance and support are the structural levels, horizontal levels you can see, the hidden levels of support and resistance. And these channels, whenever you see a channel, stick it in because market breaks above it, comes back to test, tries to break above it, and you can absolutely see that. So this blue line is part of the measured move I showed you earlier on. So just very quickly, bearing that concept in mind, if you ever look at the euro versus the dollar, look at what's happened for a long time. This whole year we've been in a very strong, in a persistent bear channel, which is now a very strong bear channel. Every time the market tried to break out above it, it failed until we got into August, tried to break above, micro double top, failed. Try the same thing again off this same channel in September. Beginning of October, strong two-bar reversal. So the bears have been defending that channel line of the strong channel they've been in until a few days ago we had a strong breakout, and I expressed my concern about breaking above a tight trading range and saying that any breakout above a trading range is going to fail. We can expect it to fail. And where did the market get up to? Let's have a look at this. So the market gets, so the break above this, very good, but they have a problem with this big round number, 1, parity. Euro is equal to the US. Euro, dollar, the currencies are the same, parity. Euro is equal to the dollar. That is a big deal for anyone, not just traders, the ordinary guy in the streets, whether you're on European economic zone or you are in the US, bankers, traders, everyone is watching parity. Okay, the market has to do something decisive. So having seen that, and of course coming out, breaking out above the trading range, breaking out above the channel, you have to expect most breakouts fail. Okay, and this in any case was not a strong breakout. We're breaking above the channel line, but we're not breaking out above the high of October, this strong two-bar reversal. We had to break out above it, which we did. But in breaking out above that, we broke out above a slightly shallower trend line, fantastic. Broke out above that lower high, above that micro double top. Didn't get to the beginning of the bear channel, but then the breakout failed. That's why we say, looking at price action, you need to see a natural breakout candle and see follow through. So failed. it is not a surprise that they failed there if you look at everything that I'm talking about for levels of support and resistance. Now, the market is still bearish from a price action perspective, because all this is really becomes a higher high double top, or double top here, or lower high double top. What the bulls need to do is work a little bit harder. They need to reverse the 2-bar reversal, get above parity, do a bit of follow through, break above this level, break above this level, then we can start talking of pullbacks. Until then, as long as we have distinct lower highs, the market is still bearish. Bears failed to capitalize yesterday. They ought to have at least given us a strong candle, so that creates indecision in the market going to the last day on Monday, but the market is bearish as far as I can see it. And just want to quickly show you before I move away from that. Let's look at that parity. We see that parity, we probably need, let's go up to the monthly. I mean, based on my charts that my broker gives me, we were last at parity in 2001. So I mean, this is 20 years ago. So this is a big deal. I mean, you really can expect that if we break out of this, whether we're going lower, which is what the price action indicates, this is a monthly chart. So very strong breakout this whole year. And even if you get any pullback, because of the strength of this breakout on the monthly, you can expect the pullback to the brief. And the market wants to do a measured move. Now, if you look on the monthly, it's even a little bit more interesting in terms of how far potentially this sell-off can go. All the way through from the beginning of the year, we haven't had a single candle closing above the previous year. In May, June, there was the opportunity, but we didn't. It was all lower high. So we still have to get a pullback. So you can make a guess any way you want. So if that's leg one, okay, so let's assume after that first leg, let's give the bulls benefit of the doubt. Let's say they can pull back. They can pull back to test that level. Okay, let's say the bulls can do that. Still suggest that the price still has to go down to this level, the 0.88 level. Now, I've just put that there, but it corresponds to the breakout. If you look at the high of this trading range, which was in 2021, and this low in 2020, just this trading range, the measured move is spot on there. So you could predict to say any pullback is only going to go that far, no matter how long it takes. So there is still a bit of bear news coming up. Now, what does it take for us to get to, on my charts, the all-time low? Well, all it needs is exactly where we're at. Okay, so if the market turns somewhere within here into the end of the year, they want to get to the all-time low. So just some thoughts in terms of measured moves. You can apply this same thinking, and for the purpose of time, I'm not going to do that, to S&P 500. You can see where we're at. Good for the bulls here, but there's clusters of resistance that they need to get through here. And the big one, of course, is big round number 4,000. That's going to be defended. And lastly, you can have a look at UK 100, big round number 7,000. Market is oscillating around that. So I just thought, we could share a little on levels of support and resistance. Hidden levels of support and resistance being the measured move tool and the leg one, leg two extension tool, structural levels that you can see, the big round numbers, and of course, anything you see on channels going up or